What's up, YouTube? Good morning. David here from DW Trader. I'm gonna have a quick look at my pairs and see what I'm looking at. Show you what I'm looking at actually, and just have a look at current price action. So, first thing that I want you to note is that the current range that we're trading within, in my opinion, it is this high and this low. Just FYI, I have a bit of a sinus issue currently, so I might sound a little strange this morning. It's just because my nose is really congested and it's super frustrating, but it is what it is. I have a problem with dairy. If I eat too much ice cream, I get sinuses, sinus issues. Who can relate? Anyway, so this is the most recent high and low. This is the range that we're trading within. So you can also potentially see that on the daily. You can see this wick, this push towards the downside. We're still within that range. So we know that the range that we're trading within. So from this low we pushed up, we reacted off of this area of supply, and we start pushing towards the downside, breaking some minor 1 hour trend towards the upside. So if this is the trend towards the upside on the 1 hour, you can see we started breaking the 1 hour trend towards the downside. So for that reason, because we reacted off of the 4 hour supply, and we broke structure 1 hour substructure, so the 1 hour trend, we broke it. Now pushing down, I am more bearish biased, so looking for price to reach down into this 4 hour level of demand down here just before the flip occurred. So what do we mean flip? If this was the last level of a supply, then it was failed and we see price going higher. So now I'm looking for price to go back towards the origin of where that flip originated from. So this push initiated that flip. So I'm looking for price to come back to that area and then do whatever it wants to do. So I am bearish until we reach this area. So the bias for the day would be bearishness. So now let's have a look at the 1 hour. Just want to clean this. I don't want to have too many things on the chart. So 1 hour, we can see we have days mapped out. So it just helps us a bit to keep things organized, easily identify previous day high and low, and so on. So there we have our previous day high, because this is Monday's price action from this line to this line. We can see the high and we can see the low over there. Quick and easy, we've identified the previous day high and low. Now we can also mark out a few other things. So we have this zone over here that initiated the break of structure towards the downside, that broke the 1 hour structure. So we could potentially see price come back into this area. So potentially a move towards the upside and then down further. Or we need to look at all of the 1 hour liquidity area. So we have now a range again. So you can see, I'm just going to quickly plot it, but we have a high and the low over there. And inside this high and low, we need to break this trend towards the upside. So this is also a trend on the lower time frame. You can see trending market. We need to start breaking the structure on this trend towards the upside. So where is the liquidity most recent? I would say this swing point. So this would be a 1 hour liquidity for me, because that would mean the trend is changing. And then obviously this one as well. So this is the most recent range that we are trading within. So why do I say that? Because this was the low. Come now, this was the low. We pushed up, we created a high, we broke the structure. So this is the high, this is the low. Again, we can see we're still trading within that high and low. So for me, a trade would be for price to reach for either the low or the high. Now we can also identify a 1 hour order block in here, which is then our demand. Sorry, no, supply. This one. That is our supply, area of supply, but it's also the Asian. We also have the Asian highs like just above it. So we'll just have to be careful of potentially seeing a sweep. So we have the Asian high. So there's the Asian high. It's actually at the Asian high. So we'll drop down to the 1 hour, 50-minute in just a bit. So this is now the areas that I'm looking for price to reach into, this low and this low, because we want to see price go down to this zone I would expect price to potentially create a pullback and then a continuation further towards the downside. That is my idea. But now the question is asked, where will the pullback stop? Will it go all the way towards the upside, sweep all of these highs, take the liquidity above this high and above this high and tap into this order block? Or will it just make a shorter pullback and then continue further towards the downside? So unfortunately, I don't have a magic lamp to tell me exactly what's going to happen. I just have to kind of, you know, react on what is given. So the 15-minute, we can see the Asian range is relatively expanding towards the downside. So we can see the high create over there, and that's actually the low. So it's a relatively big Asian range, and we have a where's the two? This one. We have about 22 pips in the Asian range. So when we have a big expanding Asian range, I'm more inclined to just look for a retracement and then a further push towards the downside. So you can see this area of supply was being respected and we broke structure further towards the downside. There's our structure break. So I'm still looking, I do think, for price to potentially just come back into this area and then further towards the downside towards this low and ultimately to this 4 hour zone down there. So that's kind of the anticipation. I won't say prediction because we can't predict the markets, but how I would react if I see this happening. So it would also be quite good if we break below this area first, because then it gives us that structure break on the 1 hour and gives us the confirmation or the intent of the market changing direction, because we can see this is an uptrend and we're consolidating, and now are we moving down to a downtrend. If this is if the 50 minutes starts to downtrend, then it's aligned with the 1 hour, aligned with the 4 hour, aligned with the daily. So that means we just want to wait for that new lower high to form. This is where we get our entry and then take the trade further towards the downside, because then all the time frames are aligned. So that's ideally what we want to see happening from a structural point of view. We have some imbalance here as well, which adds to the makes it more valid. The 30-minute, I'll probably just use that candle. We have a little bit of imbalance probably in this area. Yes, the 5 minute looks a little bit sloppy. We'll just perhaps have a look at this area as well. We had this was the last pause before the flash towards the downside. So price could potentially just come and tap this area. So I would rather have a larger stop loss, 5 pips, and then get in over there and then still target these lows for 40 pips, 40 odd pips, which would still be a relatively nice trade. So this is the setup framed out and potentially what I would be looking at for today. So let's see if it plays out and maybe something changes and then we need to change our mind. We need to change our perspective. But that's currently what I'm looking at. Just noticing we have this candle here as well, which could act as a level of demand. I think my problem with this candle is that this move towards the upside was just still, it wasn't breaking any structure, major structure. We were just training like this. We never broke above this high. So I'm not sure if I would want to look at this. Maybe, um, maybe, but currently not thinking. So, so let's see what happens. Okay, let's have a look at the next pair. So here we have Aussie dollar. I'm going to start this chart off naked so that you guys can follow along exactly the thought process. So first, the daily, I just want to look at the daily swing high and swing low. So we have this high and this low. So I would say that this is the range that we're currently trading within. So let's take this to the downside, to the 4 hour. Then on the 4 hour, we're looking at how price is moving towards the downside. So first of all, let's just mark out this level of supply. And then this one, And then let's do this one. Let's do this one. So why did I mark all of those? Well, primarily because those are the key swing points where price started the swing. So we see we went up, so we can also just mark this one as well. Like this. We created a swing point, we pushed towards the downside. And then we pushed up, created a swing point, and then pushed further towards the downside. This was kind of a pause area, so not really part of it. So I'm going to remove this one. And then we pulled back, created a swing point, and started pushing down again. We pulled back towards that origin of the swing point, reacting off it, and starting to, just before we pushed down, we created this another area of demand, supply, and then started pushing down, then complexing, correcting back towards this area. So what do we see here? We're clearly seeing the price is respecting bearish order flow. We're pushing towards the downside. It's very evident, and we can see price is moving towards the downside. So all of the time, the supply, so the demand is failing. So we can see there's the start of a swing point, it fails. There's a swing point, it fails. Then potentially some of the, not really a swing point. So we have this one down there, down here now. So you can see them failing and the supply holding. So prices trending towards the downside. So the 4 hour is bearish. So until we break above this area and start breaking and start respecting the supply, the demand areas, then we will turn bullish. But currently still bearish. So all of that in mind, let's now drop to the 1 hour and look at what we can currently see. So we just quickly need to place our lines right there. So we can see we had Friday and our Monday's price action just trending towards the upside. And then today we had this push towards the downside, breaking structure and breaking substructure. So we've already broken. So you see the 1 hour trending very nicely towards the upside. And we now broke below these lows. So where's the new 1 hour supply? It's over there, our 1 hour order block. So my anticipation would be for price to return to this area and then sell off further, because it's clearly that the 1 hour trend was bullish, but now we're in line with the 4 hour trend. So if the 1 hour is bearish as well, and we know that the 4 hour is bearish, then we have a high probability of finding sells, right? Makes sense. We also could quote this as a sweep, where we have these highs broken above it. We have this little wick there. We'll look at that now. And then we broke structure towards the downside. So it does look like a sweep pattern to me. So let's have a look at the 15-minute. There we have the small candle just reaching above, grabbing the liquidity, and then it starts to break down. We see the structure break, see the price moving towards the downside. So we have this zone over here that I would count as the origin of this big move that broke structure firstly over here, and then we broke structure over there as well. So now that we have this impulsiveness, a strong move towards the downside, you wouldn't really want to be buying this now as demand because of the sheer momentum that it's being moved towards the downside. I think you would probably see a reaction, could take a trade, but this would be then the selling area, in my opinion. So, but also, yeah, it's very bearish, so we would want to see price slowly coming back up. I wouldn't want to see it just V-shaping towards the upside, because if it's just like a V-shape towards the upside, then probably it's just going to continue higher. So how it corrects back towards this area is key. It needs to be slower and needs to be more controlled. So what I want to bring across is just looking for price to align on all time frames. So if you have your 4 hour, then you can see your 4 hours towards the downside. Then you need to see your 1 hour aligned with your 4 hour. So we can see that 1 hour is starting to align with the 4 hour, pushing towards the downside, breaking above, below. This low would even be further confirmation because it's a stronger swing point. Just because it's more prominent. Here we have 1, 2, 3, 4 candles. Here we just have the 3 candle formation, which is ideal. So obviously then I would want to clearly see a break over there and then coming back down into this area and then move down lower. As soon as we have that break or price stopping and we see this price returning, we could place a premium and discount tool on it, and we can identify where is the liquidity in the premium area, because we wouldn't want to be selling in the discount, only be selling in the premium. So we would want a way to see price return somewhere here. So we can already see we have imbalance, and then the order block up there as well. But we would want to see ideally price creating some structure, some liquidity, inducement, or whatever you want to call it, some previous highs, and then for price to sweep those highs, tap into the imbalance, tap into the order block, and then melt towards the downside. So in an ideal world, that would be the plan. But you can see it's kind of a bit in the future, because this could only happen in New York session, maybe, or price could just be doing this and just further dump towards the downside, because that's kind of what's been happening lately to me. I have these plans, but they just never unfold. So let's see if this one will unfold. So I'm going to keep it on GU and Aussie dollar. I don't want to make this video too long. And yeah, that's going to be it for today. So Aussie dollar, this is what I'm looking at. And then GU, this is what I'm looking at. So let's see if this does happen or not. Who knows? It really depends on how we get back to this area. It shouldn't be a V shape back towards this area, because then I'm inclined to not take the trade. Let's see the reaction over here. Could be something, but still we have some time before London Open, which is only at 10. Come on, 10. So we have London Open then. So we still have an hour and a half before London Open. So that's it for me today, guys. Hope you all have a wonderful day. See you in the next one.